Okay, let's start off. Wait. Okay, just a minute. Performance now. Okay, good. Let's start off. This is today is on 25th of February. I'm going to be doing an overview. I'm going to be doing an overview for the week. How the week has been. It's up, it's down. Okay, I'm going to be deleting all of this. Okay, okay, let's look at. I'm going to be doing an overview. This one is already marked up, but we'll start with. Going to start with. Okay, good. Let me start with gold. I'm going to have the 15 minutes time frame for gold. So what I'm going to do is that here is where the market. Okay, I'm going to put this on full screen. Here is where the market closed at. I hope you. Here's where the market closed at. I'm going to put a line there. This was the Thursday through Friday. For each and every day, I'm going to put a horizontal. Horizontal line. Going to put a horizontal line there. Another one there. Another one there. Another one there. And the last one, I'm going to do it there. So what I usually look at is that the key points that I look at is the high of the week. Basically, I'm going to do the buyers. I'll come here. Okay, for the buyers, we still bearish. As I shared the chart earlier on my Twitter page, I'm still bearish on gold up to maybe next month. I'm bearish on gold because there are some levels. It hasn't come. There are some levels. I did share the analysis on there on my what I'm expecting gold to do in the coming months, because I'm expecting it to make the low of the year. Remember, this was the low of last year. Okay, this was the low of last year, and we can see there is a potential. There are equal lows here. This is a weekly time frame. There are equal lows here. You can see the market broke its structure here. Here the market broke its structure. It was currently it was in an uptrend. Now you can see it broke. You see the candles that were forming below. So I'm expecting in the coming months that gold will be bearish. I'm expecting it will be bearish. It will make the low of the year. Before it will make the low of the year at around March towards April. Then we'll start looking for the high of the year, because this is something. If you go back to your charts, this is something that repeats itself. So you can see there was a clear break of structure here. Although there are some consolidation that happened, there was some clear break of structure. Okay, I expect some little bit of retracement before we dive deep into the sell. But meanwhile, for this week, I was expecting just a minute. This was Friday. I was expecting a bearish. I have a bearish bias. Okay, I have a bearish bias on gold. So what I did is that, for me, for the start, what I do is that although I shared this one last week in my Twitter page, I'll pull that one right up, my chart of what I shared with them. So I'll come to my 15 minutes time frame. Remember, what I'm expecting is that, okay, we have drawn the lines here. Remember, we have drawn each and every day what happened, each and every day what is happening each for each and every day. Okay, so I'll come. So my policy is that I'll look for my high of the week in between Tuesday, or is Tuesday, yeah, Tuesday and Wednesday. That is where I'll look for my high of the week. You can see here the high of the week formed on Wednesday. That is where I'll be looking for, because I have a bearish bias. So I have a bearish bias. So what the market will do is that the market will make the high of the week, then it will continue going down, as you can see what happened on Thursday and on Friday. So if I have a bearish bias, I'll come here, I'll look at the opening price. Where did it? Sunday's opening price. And remember, okay, although I'm in Nairobi, I'm using New York. Okay, my trading view time is in New York. So I'll be looking at, mostly because I mostly trade dollar pairs, I mostly use the New York time. Okay, New York time zone. So for New York session, for New York time session, the market opens at around 6 p.m. So I'll come there, I'll put my horizontal line. Then I just click on it. Just a minute. Sunday's open, that is Sunday's opening price. So after Sunday's opening price, I'll know that now I'll be waiting for price. What happens is that on Mondays I don't trade on Mondays, but Mondays it is usually a very interesting day because the market will do some sort of a fake out. Then I'm expecting the market to go below. On Tuesday, it will go below the opening price on the Sunday opening price before it tries to rally up. But this one never gave a complete, okay, this one never gave me a complete setup because I'm expecting price at least to be above the Sunday price for some while, then it will drop, because whenever it starts dropping, it should not come back to the Sunday opening price. It should not come back up, because whenever it starts, you see, whenever price starts coming back up to Sunday's opening price, that market is ranging, because we had a range on Tuesday and on Wednesday. Okay, so for each and every day, for example, I'll look at my sessions. You have the London session. New York time, I do not, okay, the London session is quite huge, but what I concentrate on is between 2 a.m. New York time and 5 a.m. New York time. So I'll come here. 2 a.m. was around here. That is where the market is moving. It's the kill zone. That is where the market will be moving. So I'll come here, I'll have my, let me change this one to be at least, let it be different. Let it at least be different from the other one. No, at least that one is too small. Just a minute. Yeah, good. At least that one will be okay. We have that one. The London kill zone session, for me, it starts at 2 a.m. New York time to all the way up to 5 a.m. Yeah, that is a New York session. Okay guys, that is a New York session. So I'll come here, I'll draw a line. You'll ask me, why am I drawing a line? I'm drawing a line. I'll mark the high of the London session. I'll come here and mark the, where is the high? There is the high. Okay, there is the high of the London session. Whenever I mark the high of the London session, I will not, okay, I'll also note the low, but I'm interested in the high, because I'm expecting price to be making to make the high of the week between Monday and Wednesday before making the low of the week, because whenever it starts going below the Sunday opening price, whenever we start seeing lower prices, because here you'll be seeing lower prices even as we continue. For the London session between 2 and 5, I'll divide it into another part between 2 a.m. and 3:30. That is a pre-open. 2 a.m. and 3:30 a.m. That is a pre-market open. The pre-market open, that was the high of the pre-market open. Also, there is another high here for the now the official market open. Okay, that is the official market open. Then this was the low of the London session. Okay, I forgot to, that is the London kill zone. Okay, okay, that is the low of the London session right there. So what I'll do is that I'll remove these lines. Good. So I'll go back and wait. Okay, here we had a buy. Okay, but it's never, okay, it's still within the Sunday opening price, but I'll not consider this one because there is no setup here. You see, it's still there is a lot of consolidation. So whenever you come to New York, remember, starts at 7 a.m. That is a pre-market open. It opens at 7 a.m. It goes all the way at, okay, up to 11 a.m. 10:15 there, up to 11. And okay, notice something. I don't want to disregard Monday, but Mondays you do not trade off. This is what happens. Okay, you'll just see the setup, but Monday is not a good day to trade because it's just a very funny setup. It gives you the best days to trade is on, for me, the best days to trade are on Wednesdays, Thursdays, or Tuesdays. Okay, Friday it's a bit strange, but Friday for me is usually a bit strange. So that is a New York kill zone. It starts at 7 a.m. in the morning, 7 a.m. in the morning to all the way up to 11 a.m. That is when the market is most active. Why I'm saying, okay, it doesn't really end at 11 a.m. You can see it goes all the way up to midnight. But my point is that for my key entries, I'm going to be focusing on that particular session, that particular window of time between 7 a.m. and 11 a.m. And between those two time zones, we have the 8:30. 8:30 is now when the market is most volatile. 8:30 you have it's when the market is volatile, and since it's on a Monday, nothing much happened. So I'm just gonna let it be. Monday is just usually you just observe. Then we come on to Tuesday, because what you realize is that the market, it did sort of a fake out, because this is what it did sort of a fake out, a small buy, and also it is consolidating. I hate that consolidation. For me, it's not something I can be able to trade. Okay, now we come on to Tuesday. I'll be looking for the same 2 a.m. here, 2 a.m. to 5 a.m. or is 5. Good. Here I know we'll find something. Or is 5, 2 a.m. to 5. Good. 2 a.m. to 5 a.m. there. You realize something. This is Tuesday. Oh, okay, Tuesday, it's okay, I can take a trade on Tuesday, but I'll take the trade during the New York time, during the New York open. Why? Because Tuesdays, you realize something. For many people, they will think this will be the low. This will be the low. Okay, there's something interesting that happens on Tuesday. Since you are anticipating a high of the week between Tuesday, just a minute. Since you are, okay, we have a bearish bias, right? We are anticipating the high of the week to form between Tuesday and Wednesday. So when are we expecting the high of the week to form? We're expecting the high of the week to form during the New York session. Okay, That is when you expect. So during London, it formed a very good low, nice low here. I'll mark it there. It's very important. Then all the way up to no buy setup here, because what I use for a buy, this is an engulfing, yes, but what I use for a buy, I'll not buy based on this engulfing, because if I put my engulfing there, I'll put my stop loss below here. It will be taken out during the New York time. Okay, so what I do is that I'll wait for the New York session. The New York session starts at 7 a.m. right there, and it started with a bang. It started with a sell. Okay, many people are like, no, the market is making the low of the week. I don't, because since Monday it's been selling. No, I'm expecting it to come to these swing lows here, but be warned, the market is just stretching. Okay, although it is in a range, this is not what's supposed to. Okay, we look at silver and oil. I will trade the three: gold, silver, and oil. I want you to look at something. I want to delete this because that one you've already had our low. So it's between 7 a.m. and 11 a.m. You can see here there are some setups. You can see there is some little movement, although the market is consolidating. Okay, here the market is consolidating. It's not doing, because it's playing within the, whenever the market starts playing within the Sunday opening price, it's not a good indicator. So what happened between 7 a.m. I'll also divide this one between 7 and 8:30. Let me see what happened. Good. Okay, nothing much happened here. Also, I'll mark up this low here. Good. There it is. I'll call it the New York kill zone. So what happened is that, okay, I'll be giving you, okay, what happens is that for this is London session, this is New York session, this is 15 minutes. What I usually do, I usually have my entries on the, you'll have the good entries on the 5 minutes. So whenever the market will do such kind of a move, this is what we call, this move is what, I don't know if you can see it. Okay, these are short scalps, and I also gave this one in my, I also gave this setup in my Twitter. When you follow me on Twitter, okay, it's at, let me put it here, at Nashville. I think I'll come to change that name, but for now, Nashville. Good. I just put it here. Just follow me there. I did put this setup on Twitter on Tuesday, because what happened is that we found a smart money concept right here. A good smart money concept here, because whenever I saw this, it took out the London low. I knew that. Okay, whenever it took out the London low, I knew that this market is just, it will not continue going down. It's just a fake out. Then it went, I bought all the way up to 1842. Okay, I bought it up to 1842.24, because this is a smart money concept right here. Okay, and also there, depending on the type of entry you are, okay, we also had an order block here. We also had an order block. The market came back at the open of the, we had an order block there. That's a bullish order block, because what happened is that the market, I want to extend, let me see if I can extend this one to my right. No, I think it's the other way around, so no, this one should be positive. Yeah, so I'll extend this bullish order block to my right. See what happened. Let's see what happened. Let's see. Okay, there was a bullish order block right there. Here there's a bullish order block. The market tried, it came also to the opening price of the order block. Then it rallied a little bit. Okay, it went higher. Okay, but for now, what happens is that I'll not concentrate on this one much because I'll not concentrate on the order block much because what I'm expecting is that, you see, for this one it never came back, it never dipped, because if it will have dipped down the order block, then we'll have had the high of the week on Wednesday, and it will be higher than the high on the week on Tuesday. But that was not the case that happened. Okay, so what I'm doing, I bought wholly based on the smart money concept here, because you realize here, because I used just a minute, I used this low here and it happened at 7 a.m. I used that low and I was able to buy up to the Sunday opening price. Then something interesting happened. Okay, let me go back to, let me remove that, go back to my 15, just a minute. Okay, something interesting happened. This is on Tuesday, because you will have to know your market, know why. Okay, the market here opened. This was the opening price of the New York session. I mean opening candle. I don't want to say price so that you'll be confused. That is the opening session right there. It opened at 7 a.m. It goes all the way up to 11 here, the most active time here, that candle there. You notice something, it formed some, okay, although we are on Tuesday, you see I'm expecting, whenever you start seeing price, I'm not comfortable, because okay, I'm more comfortable price played in between Sunday's opening price, because it sort of tells you that we are in a consolidation. It sort of tells you we are in a consolidation dating pattern, because price should be above. Okay, whenever you are bearish, it should be above. It should be below the Sunday opening price, and whenever it's bullish, it should be above the Sunday opening price. But that is not what happened, because it was playing in between here. What happened, it formed something very interesting, because it formed, okay, let me see, okay, there is that high there, and there is also another high there. Okay, and now go to my 15 minutes time, 5 minutes time frame. I love my 5 minutes time frame very much. Okay, good. Yes, gold for this week, we had a lot of consolidation. Okay, we are in between. Okay, I am in between my kill zone sessions. So the market made a high. The second high was it never came back. Okay, it did not break the high of the New York session. It never broke the high of the New York session. But what did it do? It formed a smart SMT, smart money concept, whereby this was a lower high. For this particular scenario, my entry will be based on here. Here's where my entry will be based on, because I usually base my entries on the fair value gap, because we have one here, the FVG. This concept, I bought this concept from ICT. He's a very good trader, and also I'm learning a lot from him. Big up, man. I'm learning a lot from you, a lot. Yeah, so because these are the concepts, some of these concepts, because whenever you look at something, before I used to look at something with a retail mindset, because I used to put my stop loss. I started by using indicators. I went from indicators, I was using RSIs, they never made me money. I never knew, because something you can be, okay, the market, what I've come to learn, the market can be predictable if you know what you're doing. And whether it's you're trading the 1 minute time frame, because this is how the market prints itself, okay? Whether you're trading the 1 minute time frame, the 5 minutes, the 1 hour, let nobody tell you it's noise, or the lesser time frame it's noise. It gives us entries to enter, because a while ago, if you could have told me I'll use 5 minutes, no, I will tell you this is you are really joking with you don't know what you're doing. But these moves, whenever you internalize them, they happen each and every day, which gives you something. Thank you, ICT, for that, because okay, the market, my knowledge before was that the market is not, it's a random thing, but as there's an algorithm, there's something that happens every day between these sessions, between these open sessions, whether it's London, whether it's New York. Okay, those are the two time frames that are the two sessions that I mostly trade. Whether it's, even if look at Sydney, I don't know. Okay, I have not done much about Sydney. Okay, use this concept, or use what I'm learning, or what I'm teaching you about, to use it on Sydney, use it on Tokyo, okay, although they are not that active, you will find these kind of setups. They happen each and every day. So there's this one here, and there's also a fair value gap here, because what happened is that it broke. You see, you are buying, then it broke. Okay, then we come, there's a fair value gap right there. It traded back there. So whenever it trades back, okay, I'll be confident. Whenever it trades back up there and it is rejected, then whenever it forms, I see it forms another high here, and we're in between my kill zone. See, my kill zone is between 7 a.m. and 11 a.m. Now I'll wait for my fair value gap down here. Why wait? Why wait? For confirmation purposes, okay? Because this is a beauty. Okay, I'll be doing short scalps. Yes, just a minute, I have a fair value gap there. I'll be doing short scalps there, okay? But notice something, I'll be doing short scalps here, then this will be my target. You see there, these are equal lows. Yeah, this will be my short target, because I'll not be targeting something big. And because whenever I put my stop loss there, I'll put my limit there, or I wait for the market to retrace back up there. I'll sell there, then I'll put my stop loss above there at Sunday's opening price. Then I'll look for this short one, because for me, whenever I start seeing this, then I'm okay, and you are almost finishing, and you are almost done with my kill zone. And then after I sell this move, I'll now wait for Wednesday. Why am I waiting for Wednesday? Because Tuesday never gave me what I wanted. Okay, because I expected the high of the week to be between, it was on Tuesday, it never happened on Tuesday. So if it did not happen on Tuesday, what will I do? I just wait for my setup on Wednesday. Yes, on Wednesday, what happened here between 2 a.m. and 5 p.m. Okay, let me remove this. Between 2 a.m. and 5. Where is 5? 5 there. 5 a.m. New York. This is New York time. This was the high of the London session. And you notice something interesting. You see, whenever price is between between Tuesdays and Wednesday, you notice something very interesting, very interesting. Okay, most probably, but I'll mention this one later on. The highs, you notice, whenever the price is doing some fake out, it will do some two highs, because realize something. This is this is New. I don't want to come to New York high, but look at what happened here. People are selling here. This was the high of the session. Okay, I'll first mark up my level, because okay, why am I marking up my level, or why am I not doing it on the lower side? the London high. Why am I doing it on the London high? Because on Wednesday I'm expecting the market to make the high of the week, and if I'm expecting the market to make the high of the week, I'm expecting it to take out the high of Tuesday. Okay, I'm expecting the market to take out this high, the Tuesday's high. Okay, so what will I do? Because I'm expecting the market to take out this. If it doesn't take out, it's okay. This Tuesday's high, or if the market continued, took out these lows here, then I will have known whenever it trades below here, it will not come back to the Sunday's opening price. So I'll continue trading it. Okay, I'll have missed this, but I'll continue. I'll catch the Wednesday or Thursday or Friday. So what I do is that this is a London kill zone session, which happens between London kill zone. It happens between 2 a.m. and 5 a.m. So I'll just come here, mark my high there. Whenever I mark my high there, then I'll have, okay, I usually divide my sessions into two. Okay, this is the London. I will not be worried much. I will not be like, oh, I missed this fair value, and this one will be a fake out, because this move will be a fake out. I will not be crying over that, because I'm expecting the high of the week to happen during New York opening price, or New York open. Okay, sorry, so 3:30, that is when the market was most active. But I know 1 minute traders, maybe they caught these these guys they caught these moves. 1 minute traders are chap, they caught that move. Okay, that is 3:30, between 2 a.m. to 3:30. You will convert it into your local time later on. This is when the market is, whenever the market is open, there is some news events. Okay, every time the market will be aggressive, it opens, there will be some news. The same way with 8:30, there's 8:30, no, 9:30. Yeah, there will be some news event that will happen right here. Okay, I'm not concerned with this one here, right here. I'm not concerned with this one. No, I'm not concerned with this setup right here, because you can see it continued down lower. Then if you had, okay, somebody will have said, no, you have broken here, you have broken out of this range. Yes, we have broken, but remember that is London session, because what happens is that the market is preparing before it is an indication, before it is preparing to do what? To sell. Yes, it is preparing to sell, but this is not the optimal trade entry. This is not where the market will sell at. No, the market must go hunt for stop, must go get the stop hunts, and it did. You can see the 7 a.m. where is 7? Good. 7 a.m. there, and 11 a.m. 7 a.m. and 11 a.m. So I'll come and mark this high, because this is what I'm expecting price to do. Okay, I'll talk about the entries later on, because I don't want this video to be a long video. Okay, good. Okay, that is it might not be that 100% accurate. Oh, just want to mark it kill zone, New York kill zone. No, New York kill zone. Yeah, New York kill zone, that is where I'll mark it. But notice something, there are two sessions. Between the kill zone session, there is another session I call the pre-market open, between 7:30, no, between 7 a.m. and 8:30. 8:30 is a official time for New York open. I'll notice something. There is something very interesting that happens. It will either form, okay, if the market is trending down, it will form another high like this one here. It will form it if it is a very good trending market, it will form such kind of a high. But because realize something, during London, this is what happens. Okay, if during London we made the low, okay, during London we made the high, okay, okay, if during London we made the low here, and during New York, instead of making the high, we made another low. Okay, now that one will have, the New York session will have had two highs, no, two lower highs here. You will have had two lower highs, whereby you will have an optimal, you'll have a very good entry. But I'll come to those scenarios maybe next week. I'll try and do a tape recording each and every day. I'll try and do it between that sessions, those sessions. I'll try and do it. So this is London session. This is London. This is London session. This is London high. This is New York high. But since it never did that, because what happens is that it will make another lower high here, then continue going down. But because it is on Wednesday, you see, and the market moves in an algorithmic way. Oh my God, that word is quite, I don't know if it is the right word to use, but the market will move. It's an algorithm. It is set. Whenever I see this high, Tuesday's high was taken out. Okay. Whenever this is on 15 minutes time frame, I want to switch back to there. I want you to switch. Oh no, let me just put it back here and switch off to my 5 minutes, my entry, my best entry time frame. You notice here, whenever I see the market has taken out, whenever the market will take out there, where is it? Whenever the market will take out the Tuesday's high, then after it finishes, you see, whenever it immediately finishes, I know that we have a smart money concept here, SMT. You have an SMT here. You have an SMT there, and I'll be able to sell. You see, you can be able to sell, but you'll wait. I'll wait for this candle too. Okay, I don't want to focus on. We'll have the entries later on, but I'll wait for the candles to close, so that it confirms it will confirm the SMT. Then I'll be able to sell. I'll be able to have my sell there, right there. But okay, that is the 5. Okay, that is the SMT. And realize something. Whenever I come back to 15, is 15. 15. This is where my entry will have been. Yes, but it peeped out here. Okay, it peeped out there, because it tried to, because it will have come back to this particular area here, come back to this particular area where you have the fair value gap, but it had a lot of momentum. Okay, I missed. If you missed this one, there is another one. This is fair value gap here. You have this one and you have this one, because when you enter this fair value gap there, when you have that entry there, this is that one there, you have that one, we have that one, we have an entry there based on those highs. Yeah, good. You can see what happened. Okay, there are 2 of them. Okay, there are several of them, but I'll have entered this one. I'll have entered here. Whenever I enter here, my stop loss will be above there. Here, it will be above, or will be on that high there. And my take profit, you remember, if I enter here 1838, my take profit would be, I'm looking at this the previous low of Tuesday to be taken out. But also you can have, okay, if you had an optimal, because what I advise people is that, yes, you have the high of the week. Yeah, you have had the high of the week form. on Tuesday, and it has given you an, this one will give you an indication that the market will no longer try and do what, and try and rally. Although this one played, it's a ranging market, it played within a range. The market would usually do it's that it will run above the Tuesday's high, form a very good setup, then continue dropping down. But since the market is not doing that, it is within a range. This is a play within a range. So what the market will do, what I encourage people is that whenever you have that entry, try and hold that Tuesday's or Wednesday's entry for the high of the week. Try and hold it up to Friday. Try and hold it up to Friday, because if you have one entry there, let's say you have between these three entries, you have one entry, okay, because you are sure that is the high of the week that formed, okay, and that it formed within the kill zone. So you can have, okay, you're not risking much, okay, you're not risking much, you're risking about how many pips, about almost 70 pips, okay. But when you go to the 5 minutes, you'll have a very good, the guy with the 5 minutes will have had a very good entry, because you just wait for this candle to form, yeah, because this candle will be the one which, if this candle does not, you wait for this candle to close, and if you don't see this candle happening, if you do not see, no, this is the difference between the 5 minutes here. I'll wait for this candle to close. If any sell candle closes below the buy candle here, is what I'm talking about. For my, okay, I never wanted to dwell much on that, but let me just touch on it. There. Whenever a sell candle will close below a buy candle, then you will know that this SMT is confirmed. So you can wait for the candle to finish forming for the 5 minutes, then you will have your entry immediate after this here. Okay, now that is I'm teaching you a trick, because you will be having a risk of $4 before this one starts forming, before this other move starts forming. You'll have a very unique entry here, okay. If I have that, okay, because I usually use my 5 minutes, let's say you had that entry right there. When you have that entry right there, this is on Tuesday, okay, you're still holding the, remember, you're still holding the trade, okay, although you're in the ranging. I hate this ranging, because whenever maybe Tuesdays, if Tuesdays has finished forming, whenever the Tuesdays, okay, whenever you are going into Wednesday, I'll put some, okay, depending on the size of my depending on the size of my lot size. Maybe, for example, I can take a partial, maybe on Tuesday's end, whenever the ending day of Tuesday, I can take a partial there, then leave the rest to run, because the market might come back to that particular entry. Do not move your stops, guys. I'm not told you to move your stops. Okay, I'll wait for 2 a.m. here, London session, 5 a.m. Nothing much happened, just trending low. Notice something, price is trying to come back to, okay, I'll teach. There is an optimal trade entry here using the Fibonacci, but that one will come into a later meeting. Okay, the market, notice something, it never came back to Sunday's opening price, okay. It had a momentum, although yes, it was ranging. Look at what happened. What was the high of the session? The high of the session was here, there, the high of the London session. So you have the high of the London session there, then we'll draw a trend line all the way up to there, a small trend line to mark the London kill zone. London does not have a lot of, okay, there are times when it moves, because when you're trading pound, just a minute, when you're trading pound, pound yen, when you're trading pound dollar, definitely you'll have this one. Definitely you'll be able to have this. Okay, definitely you are going to be able to have this kind of setup. So this is the London session. That is the high of the London session. It goes all the way up to 5, nothing much, no setup here for me. Then I'll wait for the New York 7 a.m. good, 7 all the way up to 11 a.m. good. There, notice something, the high. Okay, this one I'll divide it into two, 7 to 8:30. You see, 8:30 there's some interesting things that happen. There's some always news, there's some news event that happens. There's always something that is being released. The high is there, then the high is there, then we have another one here. That is during after the open, after the 8:30 open. We have another one there. We have another one there. Here we have two of them, and I'll go back to my 15 and off to my 5 minutes. Remember, we had the two of them. Good. So whenever I come back to my 15 minutes time frame, there was a small SMT. There is a small SMT there. There is a small one there. Then what happened is that we had a fair value gap there. We had an FVG, then we traded back into the FVG, but notice we never went back up. You see, you can have another entry, right? But this is not good. This is not a good fair value gap, because it never, you see, it never closed below this sell candle. Okay, I will not take that one as a sell entry, because you see here it never closed below. It should close below here, complete below, but since you have a confirmation of a small SMT divergence, but here no trade entry for me, so we'll have 15. Okay, let's go. Good. That is London. And also I want you to notice something. That is very interesting. We have this, and also we have, okay, number, so this one, we have that, and we also have the bigger one. We have this. Okay, because I can either way, I will have, okay, either way you can, because okay, I've looked at this one for some time. Either way I could have taken, no, Wednesday I never took a trade, but I'll have sold based on this concept. Also, there is one here. You see, the market is telling you it's trying to come back higher, but it's not happening. Okay, good. So what happened is that you can also sell here, wait for the confirmation, wait for this sell. Okay, wait for this right here, wait for this sell candle to close below the buy candle here. That is the confirmation. That is when we'll have had another entry. We'll have had an entry there, because it came back. It's an order block. It came back there, then it started trading. Although when I put it there, my stop loss, remember, I not put my stop loss up there. I'll come put my stop loss there, above there. Whenever I do that, now my previous, remember I had an entry here. I'll put my stop loss, I'll pull it from the loss to profit. Okay, and also I can take at the end of Wednesday, I can take another profit right here. I can take profit here on 8:30 opening on New York on Wednesday. We go to Thursday. No, sorry, we were on Thursday. Yeah, sorry, we go to Thursday now. This is Wednesday through Thursday, then Thursday through Friday. Yeah, sorry. This is Wednesday through Thursday, then Thursday through Friday. I'm confused. Boom. Between 2 a.m. Good. Between 2 a.m. there and 5 p.m. 5 a.m. Sorry, that was a London high. Okay. There it goes. That was a London kill zone. Just a minute. Okay. Just 1 minute. That is a London kill zone. Then, okay, that is a London kill zone. That is a high right here. Is a high right there. Then, after the high happened, there was another one at 3:30. Now is here here you see whenever you are below the Sunday opening price, you have now you have some small liberty to trade the London session. That is the 15. Let's look at if we'll find an optimal entry. We'll find a fair value gap. Yes, we did. Look at here. You have a divergence here. Okay, good. Let me see. You have one there. Smart money concept right here, and not enter based on this one, but notice something. This candle closed below the previous buy candle. There's an FVG, fair value gap, and notice something. My fair value gap, I'll put my stop loss at London high session. If I'm a day trader, I'll put my stop loss there, above there, and then I'll have an entry here. If I'm a day trader, I'll wait for the New York open. So because we have had that entry there, then we come back to 15. This was Thursday through Friday. Yeah, because sorry, yeah, this is Thursday through Friday, because in my home country, you see, in my home country, we have the advantage of having you have the whole you are able to access the two sessions comfortably. One is the London session is usually in the morning. The New York session is in the afternoon, so you are privileged. I'm grateful for that, because you are able to do that, see these sessions. Okay, let's go back to New York. Remember New York, what time does it open? 7 a.m. 7 a.m. all the way to 11. Where is it? 11 a.m. Notice something. Okay, here also you have a you have a bull. Okay, I'll come to that one, because I'm focusing today on not be distracted. This is where I can, if you are a day trader, you can exit your position here, or wait for 11. Wait for the end of the kill zone here. Come here, 37 a.m. You have a high, then wait for 8:30. See if we'll get any high at 8:30. This was the highest high at 8:30. That was the highest high at 8:30. Then after what happened? Let me go to my 5 minutes time frame. It's also you see, there is also a same concept. You can see there is also the same concept of the SMT fair value gap here, right here. It never traded above that high, because if I entered right here, if my entry is right, mostly it is usually right there down 1815, I'll have a stop loss of 14 pips. Okay, then I'll be looking to offload all my positions at the end of the kill zone at 11. At 11 I'll be looking to exit all my positions there. And that, ladies and okay, I've taken some bit of a time. I don't want to go beyond the 1 hour limit, because okay, I don't want to go beyond the 1 hour limit, because I don't want it to be a long, boring. Okay, it's an interesting one if you are interested, but some people it might look boring. So you'll have had, you can see each and every day you have an entry. You can have an entry for each and every single day. But I'm not saying you can trade every day, but you can have an entry for each and every day if you want to, because most of the time you will realize something. Okay, I'm also busy doing some other things. Okay, I'm not 100% here. I'm not that's why these big banks, they have an algorithm, because they have set the algorithm to do these things each and every day. Okay, and notice something. If the same principle, if I was using the 1 hour time frame, you can see the 1 hour, or if 15 minutes is just for observation, 5 minutes is for entry. If I'm using the 1 hour, 4 hours, it will not be anything different, because you can see you're following the market structure wherever it is going. Okay, so that is all for now, guys. Keep safe, be safe, and see you again next week. I'll do a recap on silver, but I'll try my best to be doing a short, maybe short videos, short 5 minutes videos for the entries. We do it live. We do it live together. Yeah, we do it live together. Okay, till then, see you guys. Take care.